Fractional reserve banking. Fractional reserve banking is any banking system wherein only a fraction of the money deposited to the bank is required to be available for withdrawal. Although your account may say, for example, $10 million CAD, that money might not be with the bank at any given moment. The ability of banks to repurpose money deposited to it boosts the economy, as it provides liquidity. After all, money that isn't being put to work is a waste. Also, fractional reserve banking invites major systemic risks, specifically in the form of a bank run. A bank run, or a run on the bank, is a phenomenon where many depositors attempt to retrieve their funds from the same bank all at once. This happens when customer investor confidence is low, either in the bank itself or the broader markets. Due to fractional reserve banking, the bank is likely to have taken risk with the deposited money. Sometimes, in order to repay customers, the bank is forced to sell its losing positions. When word gets out of this, more customers lose confidence in the bank, and the bank run intensifies. Indeed, Silicon Valley Bank collapsed for just this reason in 2023, making it the third largest bank failure in U.S. history. A bank run by any other name would cripple the working class just as swiftly. In Canada, the Canada Deposit Insurance Corporation, CDIC, automatically insures deposits in bank accounts for up to $100,000 CAD. In the case of a financial institution failing, the CDIC will automatically pay customers back up to that amount. In both Canada and the US, if a bank fails and you have deposited more than what is covered by insurance to that bank, then you are, to use a technical phrase, shit out of luck. You lose because someone else gambled your money and lost, while likely also paying upper management hefty bonuses. But wait, it gets worse. Rehypothecation is when a lender uses an asset, for example, a house, provided as collateral by a borrower to cover its own obligations. It's akin to saying, Bob collateralized his house to borrow $500K from me, and now I want to borrow $700K from you. If you're worried, don't be. I'll pass on Bob's collateral as my own in our deal. It's a cycle of leveraging collateral from one party to go into debt with another party. It creates a house of cards that can quickly bankrupt an organization if things go south. Rehypothecation was a factor in the 2008 financial crisis. It contributed to the interconnectedness and complexity of the financial system, thereby amplifying systemic risk within the housing market.